Okay, I'm going to ask both my panelists to tell me a bit about themselves and what the company they work for is. So let's start with you, Nicola.
Hi, my name is Nicola. I'm the CTO of Digital Assets Powerplay. Yeah, I think that I'm loud enough. Do you hear me okay? Yeah, thank you. We're first Croatian ICO. I know ICOs are a dirty word, but it is what it is. We have hands-on experience how to raise funds, and I'll talk a bit about that. We're in the algorithmic trading area.
And Gorazd?
Thank you. My name is Gorazd. I'm a director at the Deloitte Central European Blockchain Lab. We at Deloitte are, I think, from the Big Four, one of the leaders in terms of blockchain adoption and how we perceive blockchain as its future potential. So we work on different topics within the firm. So as you know, we have different types of services we offer. So I myself, I'm from the consulting department. So what we do is we support the development of blockchain technologies in practice, meaning we support firms, governments in terms of proof of concepts, defining useful business cases, and also helping them with the technology implementation. On the other hand side, our tax colleagues, they often support companies with, I'd say, blockchain or token type of accounting. So they talk about the differences between, is this like a inventory or is it a financial instrument? How do you account for it properly? And we have selected risk advisory services which assist young startups or people involved with blockchain with different types of risk advisory services where they give limited assurance on different type of questions regarding how building trust between, I would say, the classical business world and then blockchain.
Nicola, you said it. You said ICO, dirty word. Tell us about your ICO.
Thank you. So we did a classical Ethereum ICO. We crowdfunded.
When was this? Give us the details.
In 2017, it was a really interesting timing because China just forbade crypto trading. So our timing was worst possible ever. But we were a team with experience, with a working product, with some funds priorly raised. So we were kind of interesting company to invest into, and we succeeded in that part.
So what stage were you at when you turned for an ICO, and also why did you make that decision rather than another one?
We started in 2015 as a UK company and raised the first round with friends and family money. And started to work with that, but at one point we needed to scale up our software solution to be available to even other people, and we use the ICO as a means to get the funds to really put it on a level that's global and available to everybody. We are developing something that's really focused, like algorithmic trading is a hard area to go into. It's a pretty closed environment, and this is something that we try to do is provide tools and democratize the access to these kinds of knowledge and tools. So
why is it now a dirty word then, Gorazd?
Well, I think the thing about ICOs that's really different from any form of funding that has been known up to the point where ICOs really became popular is that you were able to raise a lot of money based on a white paper or based on an idea. So the majority of the project that were successful in fundraising, they had two things. So they had a great white paper and an idea which interested the crowd, and they had a great, I would say, marketing campaign which engaged people and retail investors. So usually, you would have to go through different steps of at least having a minimum viable product, having some market traction. You would be funded, similar as Nicola said, through friends, family, and then you get some seed funding, and then before you're eligible for a more serious round of funding. But through an ICO, overnight you were able to cash in about 20 million, I think was the popular number that everybody was raising. And that gave you, a pretty big head start to develop your project. Now, as some of the developments have been in the ICO space, a lot of these projects or kind of failed to deliver, or some of them turned out to be anything but what they promised. So there were a lot of investors that were left with nothing. So I think that's where a bit of this dirty word comes into play, because it's hard to separate who has honest intentions of developing something with the technology, and who is just looking to make a quick buck on fundraising through retail investors.
So people got a lot of money in, but I mean, they get a lot of money into something they can't necessarily use if they haven't got the infrastructure set up right, and the relationships with the bank and so on. I mean, we saw some problems there too.
I mean, a lot of people that fundraised in 2017, they were not quite aware of everything all the steps they need to adhere to be able to get a banking relationships. Now, usually a bank will require to know what is the origin of funds that were received through the ICO, basically saying they would like some sort of comfort to know that none of the money that was invested in this ICO came from illicit activities, or that no money laundering was involved. So that's why, when you see the ICOs, there's a huge emphasis on KYC, on anti-money laundering policies and similar. And in 2017, many of the ICOs that fundraised were not putting much attention to these processes, and they are having now huge difficulties with provenance of their assets. And many of the banks that have banked them are deciding to cease these relationships. So then you have a problem of how to assure cash for your day-to-day operations if you don't have a banking relationship.
Have those problems largely been ironed out now?
Sorry?
Have those problems largely been ironed out now? Have they been resolved?
I mean, no, as far as I could see, many of the ICOs at least did a basic...
Sorry, I meant with new ones. I meant like if people move on, have people worked out how to get around these problems?
Well, some people lost banking relationships, some, returned some funds. There were different solutions, but, at the end of the day, you try to find some banking partner who will offer you a fiat gateway, because that's like the only way you can basically do something or pay your staff or develop the project further. Mm-hmm. And I mean, one of the problems that has also occurred is, since I think everybody's aware that we are now in a huge crypto downtrend, that many of the projects that raised in 2017 or in the beginning of 2018 have now maybe a third of the funds they raised if they have not converted into fiat. So meaning that, if you were at the beginning of the year, you had money to run your project for 5 years, maybe right now you have enough funds to run for 1.5 years, which mm-hmm. creates a lot of pressure on your timeline and your route to market, how fast you have to be in your product development.
But the promise of being able to go, to skip the intermediaries and give ordinary people a chance to buy into a great idea early on, I mean, that's still a very profound and serious idea. So what next for that idea?
Well, I think, what everybody is seeing in the market is that, when people realize that once I lose my money, or I lose my money due to, I don't know, the project not fulfilling its promise, or just simply saying, yeah, it didn't work out, sorry, you're basically left with nothing. So I think the evolution is that people are looking more and more into securitization of the token offerings in order to have some comfort or some regulation that, the ICO will be conducted under conditions which can be regulated, and can give investors comfort that their money is, at least they have some investor protection, as opposed to running a classical ICO that was done in the past through a utility token offering.
So let's just hear a bit from Nicola about how it's gone for you since you launched your ICO, and what stage you're at next.
I would just say it's been a year
yep.
that we did our ICO, and the technology moved on really, really quickly, and there's been many advances in addressing the issues that the ICO craze brought up. The due diligence process that you said, who's the team, how will the funds be raised, and there is a lot of technology advancement that it's done automatically on the blockchain, so without human intervention, either that the funds are released differently in some step phases, but the token itself, the security or whatever it represents, is totally differently implemented on the blockchain. And this is something that's really quickly advancing. And if you do an ICO today, maybe in a year, it will be totally different. But I think what it showed that it can reduce friction in the fundraising process, the ICO, and it showed us one way that it works, and it showed us what it doesn't work and what's wrong with that kind of process. And the open source community is really quick to learn, and it fails fast when it needs to. And I think even when you look in some protocol level, the updates that happened are addressing just those kinds of issues. If I were doing it today, I would probably have more strict process of getting to the ICO phase when the funds are really coming in, and probably have some kind of custodian of the funds that will control the funds until now. Because one thing that people don't think about is if you're an ICO and you got 20 million, we got 2.6 million at that point, which is like we're the small guys, you know, and it's $2.6 million. Let's not kid ourselves. It's a huge amount of money. One problem is that you don't need everything the first day that you got it. You know, your business plan is maybe 2-3 years, and there is like a bunch of money that you don't really need to actively use in your first year. And you have a problem where you have a product that you need to create or upgrade or deliver to your investors, but at the same point you need to take care of the extra money you have, because if it's static, it loses value across the year. So it's really hard for startups that don't prepare themselves for the amount of money that they will receive. It just loses value across time, and it's not managed correctly. So I see a need for institutions that will help companies that got that kind of money in a short term. Because what happens, you have an ICO, you got 20 million, and they go and buy a building or something like that. You know, why do you need a building? Because they try to move that money to something safe, you know.
Yes.
And it's not really optimized. When you're a team, especially when you're a small team, you need to focus on your product, deliver it, and somebody else that is professional in managing huge amounts of money will probably do it better than you. So it really provides some challenges when you're a small startup. Maybe your overview on the business side of things.
Yeah, I mean, an interesting thing that Nicola pointed out is like how you manage these assets. So, you know, the one beautiful thing about blockchain technology is that, you know, it's more or less it's anonymous. So when you transact with different wallets, you never know who you're transacting with unless you know the person on the other hand side is in control of the wallet. So I think we had a client who had an example. I don't know how many of you heard about the parity hack, but he had a multi-signature wallet for keeping of his assets besides his cold storages and exchange accounts. And on that account, he had like, I think about 13 million of assets that were locked through the parity hack. Now, he had these funds, so the funds are still there, but due to the bug in the code, they cannot access them. So there's, I think globally, there was approximately $150 million that is, okay, now it's a bit less, obviously, but people's funds are locked in those wallets. So they cannot access them, but are still there. So they're thinking about how to access them. But it's really important how you manage this money. So also, if you get the, I don't know, 14,500 Ethereums, what do you do? So you cannot just run to a bank and say, I want to exchange, 20 million of Ethereum. So it's also hard to put that through the exchange. You need like, usually these kind of large transactions will be done over the counter. So you need to find a reliable over-the-counter partner who will find the counterparty for you to exchange this money. So it's a lot of challenges actually into dealing with this. So if you're like, imagine yourself being 18, 20, 21, having developed this great idea and thinking about, developing the solution, and all of a sudden you have 20 million in your bank account, and then, you need to manage this. So you need to manage this in order for your team to have funding and in order for you to develop the idea. And, I imagine myself as a 20-year-old, I would have a difficult time managing 20 million. I don't think I'll be up for the challenge.
I mean, it seems like we need to rebuild some of what we lost by moving away from the individual investor or the company that's investing in you, because they were the people who would have held your hand through all this sort of process, and now you've gone direct to to something, then you need to fill back in some of the things you could have expected before from that relationship.
I mean, it really depends, So a lot of the teams that you see, they have like really strong advisors in their projects. But in the end of the day, a lot of the advisors are only name dropping or like showing faces that give the investors confidence that a competent person is involved, but actually their involvement in the project is very limited. So, you will have people that are on 20 projects, and I'm pretty sure that, if you calculate their time, they cannot provide enough advice or guidance to any of these projects to make it be a good advisor and to support them in different types of processes.
So what other mistakes do you see people who get money making? I mean, I think when we talked earlier, you were talking about the speed at which people try to move. And
I mean, one thing is really the ambition level that people would try to achieve. So, sometimes you see projects that will say, I will build a rocket ship and fly it to Mars in two weeks. So I think pretty much every one of us is sure that nobody can fly to Mars in 2 weeks. So I think sometimes really the ambition level of a project is much higher than, it takes time to develop things. So I think, everybody will agree that blockchain is a great technology and it is a technology of the future. But in some ways, even though it's been around for 10 or more years, it's still very nascent. So if you look at the protocols that are the largest protocols today, the protocols being developed, it's still, there's not many main nets that function well. There's a lot of bugs. There's a lot of issues in terms of usability, user experience, things that, there still need to be ironed out. So as long as, you don't have the baseline that runs everything working properly, it's difficult even to develop different things on top of that. And I think that's like one of the main challenges, to see how many of the, I don't know, now we have about 3,000 projects live. So how many of them are even on a mainnet, and how many of them even have a minimum viable product or working product? Needless to say, not many of them are revenue generating. So it's more still in the phase of using the money that they received to build a solution rather than to be on the market and market a solution.
Does that resonate with you, Nicola? Maybe over-ambition or other mistakes that you might have made if you look back?
Well, my personal company kind of started wide. We got 30 developers at one point and started to deliver everything that we promised. But at one point we said, okay, we need to focus on one specific product, deliver that, and then build on. So it's a thing that you learn as you see how your team reacts. What I would like to address is having a project on mainnet, whatever that means. You have different blockchains today, and they are doing the same thing. They are trying to be everything, Ethereum, Bitcoin, they will change the world. They will try to do everything, and it's really hard to design a protocol that works for any business case. Every industry has its own rule set. Every industry has its own needs. Maybe for some industry you need thousands of transactions per second. For others, you have different technical requirements. And I don't believe in a future when we have one blockchain rule them all. Because I see in the business world different needs. What I see in the future is basically specially designed technological solutions, aka blockchains, specifically for that industry. And I think many projects are going in that way today. What's currently interesting in point of research and development, that's my area, is basically having different blockchains talk to each other. And having some kind of a global standard, how do you communicate in between them? And I think that we'll see more and more projects in going in that direction, and less some tokens designed on some global network, and seeing more and more private networks that are specific for that kind of industry.
Does that resonate with you?
Yeah, I agree completely. I think the proliferation of projects also brought about something that had I would say quite a negative spillover also in terms of 2017 on the development of the technology, is the fact that not every project that is launched really needs a blockchain, So, when you're looking at what actually is a blockchain, it's basically a distributed ledger across different nodes where it kind of creates trust where there is no trust between network participants. So, I mean, that's the basic idea. Now, at one point in time, everything required a distributed ledger. Any business idea had to have like some sort of a distributed ledger for you to be able to issue a token. And I think like lots of projects were issuing tokens where it wasn't actually a blockchain project, but you were fundraising through crowdfunding rather than you were developing an actual blockchain project. So many of the teams didn't even have developers, so they had, outsourced development, which pretty much created a smart contract to run the ICO, but underneath there was not much in terms of developers developing the DApp or developing the, protocol or the smart contract for the protocols. And that also creates, kind of this balloon that, popped in the last 6 months.
But I would argue it's legitimate to use a technology just as a crowdfunding tool if you communicate that clearly to your investors. If you don't use that blockchain aura just to raise more funds, and I think that's the main usage of the technology today is basically crowdfunding. But some of the projects kind of use that buzzwords to get more outreach, even if they don't need it. I would call it a distributed, Kickstarter, or what's the name of the platform. And I would say it's okay. But if me as an investor has the clear information displayed that this is some project that focuses on, I'm not sure, some other area. But you have that other view where software is eating the world. You don't have industry today that doesn't have a database and doesn't have some IT system. You go to agriculture, basically GPS-controlled machinery with huge databases in behind. And you can basically try to apply it everywhere, but it just goes part of the solution. I would go back to the initial moment. It's important that there is a structure in the raising funds process, and that you're honest. And that honesty is the main thing. If you're not honest, then you will lose at one point.
But I think that this was like one of the main points of why the whole fundraising went kind of sour, is because we have 3 types of tokens basically. So we have the currency, which is like Bitcoin, Monero, Zcash. Then you would have the utility tokens, which would be a good example of Ethereum. And then you have security tokens, which would be a good example of almost nothing yet. But we have platforms developing that will enable the issuance of security tokens under regulated conditions. And there's many of these platforms popping up. I think the issue that came with the crowdfunding was that everybody was trying to define the utility of their token. That was actually more of a security, but we're saying, our token would be used as a utility to pay for writing the data to the blockchain. So you would be using it sort of as a currency to hash and write the data to the blockchain, and that would be its utility, which was kind of, I think, a skewed logic of saying, I have a security token, but I'll be calling it a utility to use as means of payment for writing data.
So we've almost no examples yet, but do you think this is going to be the next thing?
No, there are many examples of security platforms right now, and they also did some projects already. And there's also a vice versa. So one of my clients had an ICO in 2016, so it was one of the earliest ICOs. And right now they're in the process of, they said at a certain point in time, let's just be what we actually are. So we are not a utility, we are a security. And what they did right now is they basically said, we're going to take all the coins that we launched during the ICO out of circulation, and we're going to exchange them for security tokens. And they are now planning to incorporate the security token company, I think, in Liechtenstein. So all the token holders will actually get a security token in return at a predetermined value of the token. And this security token will give them 2 things. So it will give them voting rights, and it will give them a dividend if the company is doing well. So I think on the one hand side, a large part of their community was quite unsatisfied due to the fact that I would say the US investors were automatically eliminated, because in the US you need to be an accredited investor to be able to participate. But on the other hand side, much of the community is happy about it because they will have more of a, I would say, more of a decision-making right in terms of how the company develops. Because through this security token, you'll be also able to participate in annual shareholders meetings, committees, decide on the future of the company, decide if the company goes left or right. So it gives you a whole new set of tools to work with.
Do you think that's quite an unusual solution, or will we see more of that happening?
I mean, as they were in 2016, they were one of the pioneers of the ICO. I think they're also one of the pioneers right now in security tokenization. Yeah. So I think the jury's still out if others will follow, but I know for a fact there's like right now at least 3 to 5 pretty good platforms that enable the issuance of security tokens, that enable,
Can you give us some names?
I know Neufund is one. It's in Germany. They're pretty close to getting good approval from the regulator. Polybos, Bank to the Future. They've been also, doing crowdfunding in the past, but they're just now doing it on the blockchain. And then they're looking at solutions how they can make this as seamless as possible for you as a company to basically offer your equity or tokenize your equity and offer it for crowdfunding, and in return tokenize this equity for potential retail investors. I'm
aware that we've got just 2 of our 4 panelists, and they're also the ones who are both very crypto, but I don't know if either of you feel you have comments you can offer on the broader world of capital, of investing capital, where people are getting their money from, these questions of data, any of this. I mean, you must have looked at other options.
We did. One of my partner, co-founder, did the whole venture capital thing with a telecom company. That's right. A successful story now today. So we did the normal way of raising capital. And we weighted our option, and at one point the tokenization was really interesting, especially specifics of our niche, that algo trading, which is really a place where you can innovate. How do you handle value? Because at one hand you have people that know how to develop algorithms and know how to type bots and develop things. But on the other hand, you have people that have money, but they don't have the time to look at the markets, And there is the mismatch in the economy. And that's something that we try to solve, to not to be the custodian of the money, but allow people to co-invest in the different algorithms. And that's where we saw the value of token. What I see as a future is a possibility to do some similar thing in changing the token possibilities, because currently it's a smart contract that's hard-coded on Ethereum, and we cannot change much in it. It has its own possibilities, and it is yet to be seen how will companies that raised with that kind of tokens will go in the future, because I really like projects that are constantly evolving and looking for a new way. So these kind of stories where people say, okay, we're a security and we'll now issue a security token, I think that's positive, because it's a really early stage environment in the blockchain, and you need to constantly be innovative and look for other ways of expressing your product.
Gorazd, I thought it'd be worth asking, since you see a lot of businesses and you work with a lot of businesses, you must have a good sense by now about, what's going to work and what isn't. What do you look for? What strikes you as something that would suggest to you a project's going to work?
I mean, you mean like an ICO project, if it's going to work or not?
Yeah, just generally speaking. I mean, I'm saying this because I was one of the judges earlier. It struck me that you see a lot of businesses, and maybe I should have asked you this before I was doing the judging, but anyway.
I mean, usually, so there's a couple of factors, and I'm not gonna, invent anything here, but the one thing is like the business case behind it. So, is anybody willing to pay for it? That's like the first question that I would ask myself. So, is this a product that has a market? How mature is it? You would look at the team. So, for example, can the team deliver, or would you trust this person with your money? Yeah, and at the end of the day, you know, it really comes down to how this team will execute. It's all about execution. It's not so much about the idea, but you know, it's having a serious team that can put in the hours, can put in the work, has the passion and ambition to go for what they set out to, and are not distracted at all the things that, you know, come across on the path. So, you know, you see teams that will have one idea, but then, like, you know, somebody in the team has maybe, well, we can look at this idea from a different angle, and then, you know, they're refocusing themselves and then taking away from the core of the idea. So that's kind of like what you don't want to see. And then, you know, what we also look at often, you know, when sometimes we evaluate projects or we look at projects, we look at their GitHub, you know. So we want to see how their GitHub looks. Do they have any commits? When was the last commit made? So how much of their code base is on GitHub? You know, if we see an empty shell of code, and, you know, and people saying, yeah, this is like super secret, and if we give our code, our business model is done, it's simply not true. So, but you see how serious the project is then at the end of the day.
Mm-hmm. I'm going to go to the audience for questions. Have we got any?
Third one.
Yeah, over this way. Is there a mic that can come over? Yeah, it's coming to you. Could you put your hand up again? There you go. Thank you.
Un, deux, trois. Oh, sorry. Malta recently regulated ICOs, and they created a new token, which is nor utility token nor a security token. Question, will this be a good thing, first, for ICOs in order to structure it a bit? And second, will those tokens be tradable, or can US investors, private investors, purchase those tokens?
Which tokens? Sorry.
Malta. The
Malta.
VFA tokens from Malta. So this is nor a security token nor a utility token.
Okay, yeah. I'm not a regulatory expert, so I cannot say for sure. I think for the US investors, same rules will apply. But, you know, accredited US investors, they can, I think, already participate. But, you know, to be accredited investor, there are different thresholds that you need to fulfill. So in terms of Malta, I really don't know how this new token will transfer, if it will be allowed or not, or what kind of, you know, status it will have.
I think we have someone here in the front who can comment. Yep. Thank you very much, since we don't have a regulator on the panel.
Hi, thanks for the mic. I hope I'm not too close. Just to answer your question, I think you're talking about the payment token in Malta. Yeah, we are incorporated in Malta, so that's why the third one.
Excellent.
But I didn't want to ask that. I wanted to ask you, why do you think if there is no code on a GitHub, that's not a good sign? When did you see Microsoft Windows code posted on GitHub? You know what I'm saying? Some things you just don't post.
Yeah.
There's nothing wrong with that. I think where is wrong, not really wrong, but in every direction what they said, yeah, everything needs to be open source and it needs to be on a GitHub, while normal business model is that it has some secrets. So you know what I'm saying? You should have some IP which is not for public. That's just my comment. I'm not saying I'm right. It's just.
Thank you.
No, I agree. So you'll probably not publish everything on the GitHub that you do, but it's a good indicator of activity that you have. So because of this community and how the community functions, a lot of the projects publish a lot of things on the GitHub, and you see the project activity there. So it can give me an indication. I'm not saying it's the only thing that we look at. So, you know, you do your due diligence on the white paper, on the team, on different types of aspects of what they're trying to achieve. So I'm not saying the GitHub is the one and only judgment criteria that we have, but it's the one that we also look at.
So we don't have an answer for you on the payment token, but I mean, I'm definitely going to be looking it up afterwards. Sorry about that.
I would just say that it's really valuable to analyze GitHub repos and activity. You can deduct a lot of information regarding tokens that are open source protocols. So when you look at Bitcoin GitHub and then Ethereum GitHub and then Monero GitHub and see how many people are interacting with and how many people are building on top of it, that can provide a valuable info what will happen with that kind of token in the future with that kind of protocol. But that is for open source stuff that's are like globally accepted. As per companies, it's, as you said, it's kind of hard to say. Even our platform is not fully open source. We have some stuff that it's really not something that we would like to share, but there is some stuff that's also open source. I think the good indication is how much you contribute to the open source community. So if I see a company that's active in Ethereum and helps and points to some errors that means that they use that software and they understand it and they can provide some valuable feedback to the developers and the researchers that are working on that protocol. But if they're totally silent, that can mean like you're not sure what that means. But I would say maybe it's just more of your activity in your involvement in the open source world, because it's basically everything is open source in the crypto world regarding the protocol layer part.
I mean, I can give you another good example. So one of my, a project came to us just recently and said, our regulator gave us a question. They said, can you prove to me that my token, once created in the smart contract, is not transferable, meaning that nobody can unauthorized, take the tokens out of the wallet once they're created and transfer them. So when we were, looking at the code was published on Git. So their smart contract was published, and we were already able to review what were like some of the what kind of limitations they put on the smart contract and how it's structured to better understand, how they already assigned to this before we can, we had a call with the CTO, but we were already able to review their smart contract and have a more content-oriented discussion. So, we kind of, at the end, it was an easy assignment, or it made sense. But if that would not be published, I could not do the due diligence if the smart contract isn't properly or not.
I wouldn't say it's an easy assignment. We kind of help other projects to review their smart contract before they go live, and no matter how many eyes look into it, you always are not sure what's going to happen when you do it in real life.
I mean, this was straightforward from what needs to be done.
I agree. It's easy to read, but it's really hard to get the exact consequences of your decisions when you implement it. You never know. You have the parity hack. We had luck to survive it. We didn't lose funds in there, but it's a really tough thing, even with open source.
We've got another question over here.
Alexandru Stănescu from Gym Platform. Thank you very much for a very interesting presentation and thoughts. I would like to ask you something related to the criteria that you are mentioning when you're analyzing an investment possibility or blockchain projects. And my question relates to the fact that blockchain technology is evolving, and you're mentioning about the code, but what we see nowadays, it's new blockchains coming. Probably in the next 2 years, we'll see a totally different type of blockchain technology. And I wanted to get your sense from your point of view on how the nodes and master nodes technology will play in this area, given that you look at a lot of arrays of different technologies. And if you see a lot of startups in this area, meaning startups who are trying to use master nodes and nodes technology within the blockchain to provide utility and not only to their solutions. Thanks.
Well, I can give some general comment. We see a bunch of new things with the master node, with the hash graphs, with the et cetera. But my question is, what business problem are they solving with that blockchain? I think that will boil down to that question. You have a specific industry, you have a specific business problem that you're solving with that technology, and it will be the most optimum for that problem. So if it's maybe a master node technology with some kind of validators, etc., I think that will be the winning strategy, because it solves your problem that you're trying to solve with blockchain. maybe we don't see the optimum. Currently, it's still early. You know, the research is happening, and as you said, jury is still out for many questions. So I think it will boil down to the question: what business problem are you solving, and is it suitable for that kind of industry or business area that you're solving?
Do I maybe have one more question?
Can I add something?
Of course,
to that?
yeah. I just if anyone does want to wave your hand and get the mic while we're.
So yeah, I also think I don't think it's a binary yes or no answer or one chain answer. So I think it really there's three things that you can decide in protocol. So it's kind of like, do you want scalability, do you want security, and then what is the velocity of the transactions that you want to do? So depending on that, it really comes down to, are you going to use the proof of work, the proof of stake, any other consensus mechanism there may be? And are you talking about a public blockchain or a private blockchain or a hybrid blockchain? There's different solutions that come into place. So there is, I'm sure there will be different blockchains for different use cases. So there's a different blockchain if you're doing, digital identity, and there's a different blockchain that is more suitable if you're doing payments, or kind of like where speed of transactions and scalability is more important as opposed to having the best level or highest level of security. So I'm sure proof of work will stay pretty much. There will be a need for proof of stake, and there will also be other solutions that are being developed but are perhaps not as mature yet in terms of how the nodes function and how the transactions are being validated, which, if you ask me, there is no Google yet today in the blockchain sphere. They may be in the future, but a clear winner is still not to be seen.
I would just add, a lot of people mentioned proof of work or proof of stake. There is the third one that's really active in development, that's proof of authority, where you have some person that said, my authority is signing this messages, and it's often missed in this mention. So I think private blockchains will go in some kind of proof of authority direction that's enterprise ready, and then you have the global ones that will be probably proof of stake, proof of work, or some kind of combination of that.
I didn't see another hand. Did I miss one? No. Well, thank you both very, very much.
Thank you.